So we end off the trading quarter on a positive note, Wayne. What are your thoughts on the level that the JSE has ended off at, and do you think that this is justified by the earnings in companies?
Okay, let's answer that two ways. Firstly, we've had a big bull market here. I mean, we've had a serious run in our market in the last short while, mainly driven by resources, even though they've come off a little bit now, but we've had a strong bull market. Second thing is, our market's not cheap anymore. I mean, our PE ratio, if you average out earnings, because earnings are at very, very high levels now. If you average out earnings, the PE gets 15, 16, which is just not cheap. So quite frankly, I don't expect the market to do much from this level. I don't see big dangers either, but I can't see the market doing much. I can't see us doing another 15% before the end of the year. When we look at overseas markets, I mean,
what level-wise, do you know what that would put us at? 15% from here?
Well, what's that? 4,000 points, 40,000. Overseas, the markets in the last year are up 25, 30%. So also, we shouldn't expect the overseas markets to do too much. However, and we've spoken about this plenty of times, we have two markets here. We've got industrial stroke financials, and we've got the resources. I think this portfolio of difference, this flow of funds into resources from the other two is going to continue.
But then, but why is that? I mean, because
just valuations, a pure valuation basis.
You know, we've had these discussions so many times where we say that they are so cheap not to get into. But then, of course, you have negative news flow, you have negative sentiment, you see negative economic data coming through from Europe, China, and everything, and you continue to see these stocks.
Yeah, no, I hear you. Things are never cheap when there's good news around. There's only cheap when there's bad news around. If there's good news around, they'll be expensive. So you must expect, when shares are cheap, you must expect bad news to be floating around those shares, because that's the reason why.
When is the real rally? I mean, are we seeing the real rally in the resources sector?
I don't know. I mean, the beginning of September, big moves up, given back about half of that relative move. But you've got to, there's only one thing you can hang your hat on in investments, and that's valuations. You don't know what's going to happen tomorrow. You don't know if there's going to be good news or bad news out of the US. You just don't know. But the one thing you do know is the share cheap or expensive today? So we know that they're cheap, and that, as I said, is all you can really bank on.
What if it's going to stay cheap because earnings continue to disappoint?
It could easily stay cheap.
And how do you know how long that time horizon? I mean, when you have BHP saying they're cutting expenditure,
you've got no idea.
And very uncertain.
It's quite normal for resource companies when things are tough to cut expenditure. In fact, that is the normal cycle. They invest at the top of the cycle and they cut back at the bottom, and it should be opposite, but I suppose that's life and the way it is. You never know with timing. I mean, you can have a lot of investment people together, and broadly they will probably agree on most things, but they will have huge differences on when they think it's going to happen. The people who don't own resources now are saying, oh, we've got a year, we've got 2 years, we can wait. People who do own them say, well, they're cheap, so I'm buying it. So with timing and that, you just literally never ever know.
Foreigners have been selling off equities this year, and they've been buying bonds heavily. If we just look at the numbers,
like there's no tomorrow.
I mean, if we just look at the numbers, you know, net sellers of 5.7 billion rand in equities and buyers of 78.1. Are foreigners? Do foreigners know something about the local equity market that we don't?
No, I just think
the fact that they're divesting.
You know, they just had the most for foreigners. This has been in the last decade. This has been one of the best markets in the world in dollar terms. I mean, they've had phenomenal returns in dollar terms in our share market. So they're not crying, but maybe they think enough is enough now. And the bond market, well, it's very simple. Would you own a South African bond at 6 or 7% or a US bond at 1.5%?
And of course,
so people are voting with their feet.
You would think that investors have done their homework and they've looked at that risk-reward relationship. No, and it seems like they're prepared to take the risk in South Africa.
No, investors are the funniest people. They just chase returns and yields. They're not worried about 2 years, 3 years. If they think they can make money on almost a 1 month basis, it feels like sometime, they're here. But we've seen the inflows, and I don't think it'll happen for a while, for another, I don't know, a year at least. But wait until we see the outflows, because the two numbers, ironically, are actually quite close. The trade deficit and the bond inflows are virtually identical. But the one's permanent, the trade deficit, the bond flows are not permanent.
Exactly. Let's talk about equities. Vodacom down at 102 today. Two pieces of news, one good and perhaps one bad, and maybe that's why the market reacted negatively. They're looking to stay, the Vodacom that is, in the DRC, and looking to launch 4G by the end of this year. So firstly, the DRC issue, what are your thoughts on that?
No, well, look, they've obviously done their numbers and decided they want to stay in there. It might hurt the share in the shorter term. But if their plans come right, there is big potential here. They can do something with it. 4G, I didn't even know 3G was here, so I really not very clued up on all of these things, but everyone's going this 3G.
Well, MTN announced it, and we were saying, the other players. And then you've got Cell C coming out and announcing a tie-up with Vitality, Discovery Vitality. You've got Gideon Novick, who used to be at Comair, now heading up that. So, of course, this is Alan, not Craig, now at the helm of Cell C, looking at interesting ways to grow revenue.
Got to do something, because they have dramatically underachieved what their stated intentions were when they entered this market. They have not been successful at all, and they have chewed capital like there's no tomorrow. I mean, they had to convert all of their loans into equity and still get more money. This is a very difficult market. Now, it's easy for a new entrant to enter a growing market. This is not a great market. This is a very, very mature market. So they're trying hard to get something back. Oh, yeah, it is. I mean,
they're calling it Vitality Mobile, I think the name is, and they're looking to have free phone numbers between Vitality Mobile members. That, of course, would be very,
great,
but free calls.
Still not sure how you make money out of giving away free calls. I'm not too sure how you make money on that, but Vitality's been very, very successful, and I think this tie-up will be good for Cell C. But whatever's good for Cell C or ATAR is at the expense of the other players, because the overall market's not really growing. As I said, it's a very mature market.
But of course, there's a lot of growth in Africa still.
Oh, yes.
And MTN is the big player in Africa. If you had to choose between the two, MTN at 160 Rand, Vodacom at 102, which one would you choose?
I actually like both of them. MTN has got some growth prospects, but Vodacom is a very stable business with a good, solid dividend yield that's probably not under major threat. So, quite frankly, I'll choose both of them. I think both their valuations, okay, maybe Vodacom before MTN, because MTN was lovely a couple of months ago when they had all the Iran stories and the share price was quite low. But the share price has rallied quite a bit since, so maybe a little bit of bias towards Vodacom.
And the Sasol share price, 370, is it still a buy because it went to 400?
Yeah, I know.
It's come back.
Way too cheap for the share. I don't get it. I can understand Anglo's falling. I can understand Billiton falling because commodity prices have fallen. Oil hasn't fallen. Oil's still at 110, 112, 115, 108. It hasn't really fallen. Copper's fallen, I don't know, $4,000 per ton, and oil hasn't fallen. I don't get why people are so negative on Sasol. It's a very, very cheap share.
Thank you so much for joining us today, Wayne McCurrie from Momentum Investment.